bitch with confidence. Yeah, I'm corporate thug and teaching dope boys how to politics.
Welcome everybody, Bueller here again, and today I'm going to be going over what we normally do as a private stream on Sundays. I'm going to do in a video this week just to see how it goes, see how it fares, see if people like this a little bit more, and maybe next week I can do the same thing and maybe edit it up a little bit better. But this is just kind of a vanilla format of what I want to go over, so everybody kind of has the same picture of what we like to look at each and every week. And a big thing, a part of our trading, is price action. We really are just focused on, one, finding good levels to truly trust and put our lives on the line for just about, but mainly to have a system to really trust, because it kind of sucks, you know, winning, losing, and then not really having a place where you're like, all right, well, this is what I do next. You know, not really having a path or a routine to keep following, you know, systematically trading, because you never just want to randomly do different things every day. Then you'll just catch anomalies and you won't really ever have a good stable connection to the market or the trades you're making on the market. So let's go over something consistent, something very repeatable. This is the TI routine plus the BB system. Again, this is just the price history plus the pre-market system that really gives us a lot of the levels as a combination, really, to give us everything we need. And as you guys can see, this was how Friday went. On Friday, we actually had a break above level at 370.20. We never ended up getting that, so we ended up getting, either you could have gotten, I'm not going to sit here and say we all just went, you know, balls to the wall on grabbing puts here, but this was a good initial signal saying, okay, sellers have control from open. Again, because we have our opening price, it drops down, we end up getting the rejection, and then we sell under that day's open. A really good short-term signal saying, all right, we might be going down to at least test the next supports. Next supports that we ended up getting under were 366s, where we had a good close with not really the best we did have good volume on this, but not really the best volume up into it. Really good rising volume, and then we ended up getting a really good just transfer under the 364. We went through the 360.80s, and we basically closed above 357.70s, our last level, which on the bigger time frame, 357s, as you can see there, from the bigger time frame, is a very crucial, not double bottom level, I'm not going to call it that yet, but a very good support from the recent drop that we had. And then we had one more drop, then we had that big reaction where we had shorts covering and all that good stuff pricing in. So is this the short-term bottom? That's a big question mark for a lot of traders right now. And even if it isn't, you know, it doesn't really matter, because either way, we're going to have a plan on either side, and that's what we're going to go over here in this video. So let's go back to this chart, and we're going to clear all the levels again, get them together, and we're going to go over how you can get all of these again. And then we'll go to the daily levels, and we'll do those again, and then I'll go to the monthly levels just to kind of show you what I like to grab just for kind of slower price action looks, or just bigger moves without having to, you know, move all the levels around crazily. So just to start it off, we're going to start on the daily time frame. This is the time frame we like to grab levels on to give us levels to trade on the 5-minute, the 10-minute, the 20-minute, 30-minute, whatever you guys are into trading on the intraday time frames. This is where we get our levels from for the majority of it. But let's just kind of start at a decent neutral ground here. And the big thing in what you're grabbing is the tops of green candles, basically. You're basically just grabbing the top of green candles, just in short. But this is what we call an emerging candle because it made a new high. And this is kind of like a break spot for it. So that's why we grab it like that. And that's mainly what we grab for our entire system. I'm going to start here at 338 and we'll work our way up. You can see I have another high made here. And I wouldn't mark this because this is where we opened and then sold off. So it's just kind of a weak spot for me. So I'm not going to mark it. Another green candle making a new high. And see how I'm grabbing the meat of it? I'm grabbing the close of the green candle. I'm not grabbing the wick. Make sure you're grabbing the meat of the bone. And just for a quick setting to turn on, you can snap drawings to OHLC, apply, and you can just do this quick click that you see me do, where I kind of click towards the top of it, and it instantly goes to to that day's close, giving me very, very easy levels to draw. And real quick, just before we move on, so you don't have to ask this when we see a bigger range, anytime you see a big range like this, from like right here, I mean, this isn't actually that bad, but it wouldn't be fair to say above 339.50, aim for 343, everybody, because there's definitely a level in between. It's not really fair to say, you know, this needs to be where you're taking profits, because that's just far, right? It's just unlikely to hold throughout one move. So what we can do is go from one emerging candle to the next with the Fibonacci. And again, this isn't really to grab Fibonacci, it's just to grab a fancy halfway point. That's all we're grabbing. It's not really anything big brain or anything like that. It's just to kind of give us a good, for sure, in-between level. And I'll go ahead and add another one here at 345.85 just to show you guys how we do it. You can always auto-zoom back out. And we missed this one. Nothing to grab there. We got one there, but you don't have to grab that. One there. One there. We'll go just slightly above current price. But let's fix this range first. We have a huge range right here. Whoops. So we go from here, 350.260 to the 357.70. And remember that 357.70 that we were just talking about on the at the beginning of the video. Sorry, I'm like stumbling over my words right now. English is so hard. But remember the 357.70, that's where we got it from. September 2nd, 2020. Again, showing you price history really is king. And I'm not joking about it either. Price history can really change the way you look at trading. I really do see price history as one of the most overlooked factors of trading. And it's because people really don't like to look back this far. They don't have a complete repeatable system. But now you guys do. This is a very repeatable system. If you guys are OCD like me, you can always edit your levels in case it's not perfectly right. Remove. And I see we're up here in the 380s. We can go ahead and stop. We're already got a pretty good range around it. Now, you could keep going for good practice, but for overall, this is what you need to be looking at first. And as you can see, we pretty much get the same exact system that we just had on the charts from last week. And we streamed those last week, so it's not like I'm making anything up. We did all this together. So, and the only other thing that you can add, whoops, let me back out to the better time frame. The only other thing you can add is going into your previous days and adding your high, your low, your open, your close, your pre-market high, your pre-market low. But if you already have levels, like in this case right here, if you already have levels that are kind of on the outsides of them, you don't need to keep adding them. Like I wouldn't go and add this, because that would just make my chart a little bit harder to see. But I can see where the better levels are from: 360, 320s, 360, 250. So if you need to add those smaller time frame levels, be my guest, but you're not going to need to do it every single time. It's just when there's not a level there. And then also going into your day's open, like let's say this was the day we were trading, you would need to mark your today's open, your current day's open. So now we know 368.50 is a solid level that if broken under or held on top of can be used as a very strong pivot point. So we'll definitely keep that marked going into tomorrow. I'm not going to add the previous day low or close because they're basically marked, and we don't have the pre-market high or low yet because it's still just in the after hours. We don't have tomorrow's pre-market, so we'll have to add that in the morning. But basically, we already have everything set, regardless of us. And let me zoom this out a little bit better. Sorry about that. So basically, regardless of where we start, let's say some crazy numbers come out, or pals, getting crazy dovish on us, and we just open up crazy high. We're way up here or something. Well, it doesn't matter. We have levels on both sides. We have a plan, right? So in the morning, let's say we started up here, we could instantly start our watch list and say, all right, well, if we hold 360 250s, 360 320s, we can see bounce moves. If we break under them, we can look for scalp moves to the downside towards 358s, 360s. And if we don't get any kind of bounce or touch of these levels, we just go up higher, we can look for break above 366, 366.80, 368.50, 370.20s, knowing that we used these levels before. So again, they kind of give you a system of a plan, a very consistent plan, regardless of where we start. So this is how you get your TA routine set up, so you can have your watch list levels set. So you guys will see me use these levels as I make my watch list tomorrow. Let's go to the daily level chart and get our levels that we like to look at for viewing bigger trades, for swing trades. And these next two charts that you're going to see me go over, these are going to be the two that I like to use personally to help myself find potential swing trades. Now, I don't always just look at SPY, but you need to look at SPY first. SPY, the dollar, as you can see, we have that charted already, and oil need to be three things that you check together just to kind of get any kind of divergences, or if you see the dollar looks like it's going to bounce off of support, then that's most likely going to lead towards SPY taking a drop. Now, they're not perfect inverses, they're not perfect opposites, but you can trade them as such. So make sure to watch those together so you get a little bit higher probability of a signal. But to help me view the daily levels, I like to go to the weekly and the monthly. So I'm going to first start off and show you the weekly, and then we'll go to the other chart and I'll show you the monthly so you can see the difference. But let's start doing the same exact thing that we did, but on the weekly. So we got levels there, levels there. Next green candle, green candle, green candle, green candle. And see how I'm marking the ones that are always breaking a new high? Sometimes I vert back and I grab one that's not breaking a new high, just to get a level there. But for the most part, you are grabbing new highs on all these candles. You can see I'm up here in the 420s. There's no need to add all these levels. I'm just kind of going overboard now just to kind of give you guys a good example But as you guys can see, instantly grabbing the same levels basically all the way up, just like we did on that daily chart. And now let's jump down to the daily, since that's what this is for, so we can view what may be going on here. And if you want to add trend lines, be my guest. The only trend line I've really been repeating to draw is this one, and it's really just to remind me what we did to get here. And where we could most likely head. So if you really want to draw trend lines, be my guest, but make sure you're grabbing 2 points and you're not really focusing on current price. I see a lot of people always grab trend lines, you know, like this, where they instantly they forget some price action, but they instantly accustom it towards current price to make it look good. And then when it comes down to actually trading off of it or using it to make a trade, it ends up just adding more noise to your chart. So don't add more noise to your chart. Make sure to just keep it simple and clean. But as you guys can see, just a couple of things we can go over already is the fact we have a very good base build here that happened before to help us take us back up to the 420s, 430s just about. And ever since then, we've taken a good drop-based drop, another bull trap. We end up having another big leg down, another little bull trap that ended up just kind of being a buyer reaction. And then we end up getting another test of this low. So that's why you guys saw me have that. Whoops. Since you guys saw me have that marked earlier as well, I'm going to mark it again, 357 being a very strong level there, even if it isn't from that far left side of the chart like we did on the other time frame. So now we can see, technically, this is just a reset candle. Technically, they could still hold 357s or whatever this low is, 356.50s. You don't have to add that, but I'm just showing you for good reference. But it looks like as long as they hold this 357, 355 area, bulls do still have a chance of having another buy reaction in similar relation to this one. Could definitely see a similar move back up to the 374s, 375s, maybe even the 380s, as long as they hold these supports. Now, what do bears want? Bears want to take out this low, so you could definitely mark this if you want to, but they want to take out this low at 357, 355, and then push back towards 350 and 348, the second kind of last defense level that we sold off to with big volume. So most likely going to see a test of this or 375s. So in my opinion, this needs to be kind of the range that you're looking at between the current low and the possible buy reaction targets up here where we had resistance before. We have 2 gaps up here, and we have a bigger resistance at the 381s, 383s areas, which we've already been well aware of for the past few weeks, because this is the level in which we fell from just this very last time. We fell from the 381, 383s. We held here for a little bit, and then we failed base, and we took our next leg down. Okay, so this is majority of our range going into the week, so that's definitely what we'll be watching. And then but let's check out this other one. So you guys saw me doing one for the monthly, and I'll go ahead and clear it so you can do it with me. But go out to the max monthly, and we're going to do the same exact thing. Now, what the goal of this is the same goal as what we did on the weekly, to get good levels, but this is going to give you less levels. Now, this is so you can catch longer, slower moves sometimes, but it's also just for viewing price action. You don't always have to make trades off of this stuff, but these do set up very high probability trading opportunities. So I'm going to grab all the emerging candles I see, and then we're going to jump down to the daily. If you want to view it on the weekly, be my guest, but I'm going to go down to the daily, and we'll show you just how crucial this really is. And this is just, again, the power of price history. That's all you need to remember when you watch these videos of me charting. And then we'll go down to the daily. And you can see we're pretty much getting the same picture. Again, we can add this level here because we know that's a recent support that price needs to break. So we're definitely going to keep that on watch. But as you can see, it gives you less levels, less noise. So if you're someone who finds having too many levels is too much noise, this is a great system to help you have less levels. You can add those halfway points. You can do everything you want on this, just like we do in the other time frames to help you out with good levels. But this is a really good system to help you have less noise on your chart. So if you're someone who's still like, yo, this is way too much for me, which in my opinion this is perfect for looking at swings and stuff. It's very easy to see different things. Like right here, you know, when we were shorting, we saw that there was a really good kind of just hilltop here against good levels, and then we got a bearish kicker. So did we just instantly jump into puts? No, we went very light, and then we started to realize, okay, if we get a good retest of this again, it's definitely good to get more puts again. And you had the similar move happen here, where you end up getting a bearish kicker, another bearish kicker, another just big bearish candle picking up with rising volume. So very easy to see signals from good areas. So again, we're not just focused on looking for good candlesticks, we're focused on finding good candlesticks with good positioning. Therefore, it gives you a way better risk reward, or even an advantage sometimes over taking some of these trades or swing trades. So definitely make sure you keep your eye out on how to grab these and visualizing. Again, don't just chart the levels, review some of the price action. Seriously, like start way back here with this base, you know, where we ended up holding a low, holding on top of that low, holding again as a double bottom, and then building up with rising volume, holding on top of ding, 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 the resistance that we've had so much trouble with right here, they sat on top of it, and then they increased with the bullish kicker. Again, just like we had a bearish kicker leave, you know, the hilltops, we had a bullish kicker leave from supports, instantly showing that bulls are definitely in control. So you can definitely find some really powerful moves based on just candlesticks with good positioning. So make sure you guys are going through that. And we do have a swing trading playlist, so make sure you do head over to that and review some of that info as well, not just taking just this info. There's a ton of info in that playlist as well that covers similar info to give you, you know, extra insight. But let's go on to the next one, QQQ, which I'm not going to do all of those like we did for SPY. I'm mainly just setting this up so I can get my daily charts correct again. But let's go to the full-on 3-year daily so I can start off. I'm going to go back to the COVID high right before we had that dip in 2020. Very beginning of 2020. Well, let's get these levels going. Emerging candle, emerging candle, emerging candle, emerging candle. Another emerging candle, another emerging candle. And I'm not sitting here to say I invented this system. You're never going to hear me say that, because I did bump into the pre-market system on my own. Now, did I invent it? No. I ended up finding out that it's actually very popular to look at the pre-market system. But I found it naturally on my own. This I did find 100% on my own, and I don't know if anybody actually uses it in this fashion. I don't know what other people would call it. But again, we're not doing anything that's never been done before. Don't let you thinking that. We really are just getting levels of price history. This is what we focus on, and then we combine it with very strong intraday levels that we know have high probability. You guys can see I'm already well above price. I'm just kind of doing it for practice. It's never bad to just sit here and practice, get some good levels going. And you can see we're well above 260s. We've got the 300s and the 230s. So we can go ahead and zoom in down to the smaller time frames and start reviewing what has happened. You know, we don't have to just review yesterday or Thursday or Wednesday or Tuesday. We can go back as many days as we want, and we can go review any of the days that have happened. Again, these levels hold up very well, so make sure you go through these. You actually are kind of paying attention to, all right, we ended up breaking really good support here. We sold off to the next significant area. We ended up failing right at the last continuation, and then we sold off down to the new low. You know, just review. Seriously, go from level to level and look at the volume. Oh, well, we didn't just break support. We also had rising volume, which I know it's hard to see. But we didn't just break support, we also had rising volume. Again, showing you that volume is helping you. And what do we have in this continuation? Weak volume, potentially showing that we do want to continue lower as long as no buyer volume steps up and rejects this area or even tries to overtake it by retesting and sitting on top of it. You can see they failed to do that. They end up selling into the next support, which I'm trying not to touch that cursor because it'll mess it up. You can see they made a low, a double bottom. They end up getting a little bit of a buy reaction, holding up a little higher, and they didn't really get any good push from that. They ended up making their test again of the 270s and failing again. And look at that. As they failed under, what kind of volume did they have? Rising volume. So limit yourself to rising volume. Limit yourself to looking for continuations with weakening volume, which can lead to finding really good bull flags, bear flags, really good retest moves. Let's remove those before we forget, because then I'll just leave them on there forever. But seriously, don't just review, you know, today or the past couple days. Review as many days as you like. Seriously, try to get it into your head. What do I want to look at? And look, just like SPY, what did we have? We had that kind of sell-off into that buy reaction throughout the first 10 minutes, with which, if you guys are in my streams, you know that we do not trade the first 10 minutes. And then we end up getting a good break, not just under today's open, not just after we failed to touch pre-market high, but we failed under today's open and a significant level at 269.38. Now, did it have rising volume? Yes, very slightly. Now, was this a good risk, though? No, because it's the very first few breaks. So if you really wanted to catch passive moves, wait for retest plays. Are you going to catch a retest play every day? No, because retests do not always happen. Sometimes you do just end up getting these sell-offs that lead towards levels, and you don't get an as easy to see retest that we like to look for. So make sure you are understanding that we have a 40% entry, the open range breakout, and we have a retest entry. Now, this is if price would have came back, tested this, and on the way back up, just like you guys saw me in that other example when we zoomed over. If they had lowering volume, let's say this is your volume bar, lowering volume or even just stagnant volume, where it's kind of flat, while price is rising into that same level that we broke as support, this will be a very solid spot to take as a 80% entry or a retest, setting your stop loss at either today's open, today's high, even just setting it at this very tight level here, and then having targets at these same levels below. Again, setting yourself up for really good risk reward. So make sure you guys understand the types of entries that we like to look for. Those are just 2 of the 3. We also have the buy the dip entry that we like to look for, but there's not really a good example here to show you that. So make sure you check out that playlist as well. And I'm not trying to, ramble forever, but definitely check out some of the playlists, the buy the dip strategy, the 40% entry, the 80% entry. These are all talked about in different playlists. Again, we have day trading, swing trading, buy the dip strategy, how to chart, all those good things. So make sure you go through that info. And this is basically what we'll be watching for the Qs going into tomorrow. You can do this on SPX, you can do this on oil, the dollar, you can do this on any ticker really. So make sure you take the time to go through this all. But let's go clean up a couple tickers that I don't have cleaned, like Tesla. So let's clear Tesla. You can see we had a great day on them the other day. This is by far a chat favorite, a community favorite by everybody, so I'm going to definitely do this one over and over. But again, this is a repeatable system. You should take time to go through it over and over on your own. So let's start a little bit back here. We'll start here. Get the lower 100s done. See, we've got a huge range here. 157.68. And make sure to leave a comment and like below if you're still in here. I really do appreciate you taking the time out of your day to view this information. Hopefully it helps you. Hopefully you enjoy it. I've been getting a lot of just awesome supporting messages lately of people saying how much the price actions helped them, how much the streams have been helping them. And that's great. That's exactly what I want to hear. Again, I'm not a spoon feeder. I'm not here to help people get rich. I'm here to give you guys a path, a routine, a system to consistently follow. I really do feel that this is what makes or breaks traders, is having a good routine that you can follow over and over and over. Not just a random routine. Anybody can make a routine. I'm talking about a routine that actually works. 204.59. And you might think at first, this system's kind of tedious. I don't really like that you're having to grab that many levels, blah, blah, blah. Trust me, you'll be thanking me when you're on the smaller time frame. As you start to view this more and more, it never gets old. You'll be like, damn, I can't believe that these levels from 2019, 2020 are working. Sometimes the charts we chart on are grabbing levels from before 2000, so it really is a helpful system. And this is where Tesla gets a little funky to chart. You get these levels pretty well. And then you get this huge range here, right? Let's go ahead and add that halfway point. And if you really must, you still don't like how big those ranges are, you can go from here to that halfway point and do the same exact thing. But most of the time it ends up leading to another supporting candle that's right in the area. So I'm going to just go ahead and add that one. And then I'm going to add this one for in between that range. So really good supports there. And you can see I got a pretty good majority below and above it charted. So we can go back down to the smaller time frames and start to view what happened here. And just like on the watch list this past week, we had break below 216.60s, but we also had break below 218.60s and 214s. All three of these being really good break belows. And as you can see, and this isn't going to happen every time where it makes it from 214 to 205. And again, that's why I don't like to plan that. But what would we have had set up in the scenario? We would have had the previous day open and the previous day low marked, giving us closer targets that make sense before actually saying, oh, it's going to 204.50, because that's just very unlikely to say beforehand. We can easily say that afterwards because it's hindsight, of course, 2020. But overall, now we can review it and say, all right, well, price, just like SPY and just like the Qs, they failed to get over that recent resistance. And you can see it's not just popping up on SPY or an index or an ETF. It's also popping up on these equities like Tesla. It's sitting under a very good known level from price history. And anytime you could be like, Bueller, where are you getting this level from? And we'll go back out. We'll go see. We'll go see where we're grabbing this from. And it looks to be a halfway point between emerging candles on December 17th and December 18th of 2020. Again, the end of 2020. Very crazy year. But you can see that halfway point being very useful. Let's go ahead and uncolor code it so I don't forget. But as you can see, just like SPY and just like the Qs, we failed to get over that level. What happened after? We broke under today's open, or the current day's open on this day, broke support, pushed towards the pre-market low, broke under the pre-market low. By the way, all of these moves having rising volume as they're breaking today's open and the just initiating range, breaking the 218.60s. As we end up breaking the next level, we had rising volume. As we broke the next level, we had rising volume. giving us really good entries, but also target stop losses. At any time, on any of these trades, you could say, all right, I'm entering here. You have a stop loss on today's open. I'm entering here. I have a stop loss at the pre-market low. I'm not going to let it get it back above. If you enter here, guess what? You have a stop loss at 218.60s or even the 216.60 if you want to keep it even more tight. You enter here. Where's your stop loss? 216.60 or even this last candle that ended up breaking, so you can kind of just have a tighter stop loss. Again, it's good to look for a loose and a tight stop loss just to kind of give you that insight in the future, because you might find setups that you're more confident in, you might find setups that you're not as confident in, so you end up setting a tighter stop loss, and that's totally fine. Just make sure you stick to it and you don't stray away from your plan. At any time, though, these levels are good targets, entries, stop losses. They give you everything. What did we end up getting here? Is it broke a new low? Let me pick up the volume a little. Weird part of the day, so it's not going to be amazing volume, but what did we get? Rising volume, again, just like the other 20 examples we just looked through. And what did they end up doing before crashing lower? See how we get this break, but we don't just get a fall into it? Sometimes the 40% entry or the initiating break isn't always going to be the level that takes you to your target, or the break that takes you to your target. And this is why it's called the 40% entry. You should be 40% confident out of 100% in this going. And that's why this is a scalper's trade entry that they'd like to look for. What would a better risk reward trade be? To wait to see if it ends up holding under both levels as a retest. So here's one retest and here's another. Let's view the volume and see what kind of price action happened around there. Stagnant. Ended up being lowering volume, stagnant. So what ended up happening as it went back into this level? And look at this. If I review it to the right, it never even crossed over that stagnant volume. It never closed over 208.30. So you should never have been, I mean, you could have been a little bit of emotional, but this should have been when you were looking for retest plays either here or here to take you under that new low. Again, once they break under this low, it's home free, bears all over. And what did they end up doing as they broke not just the stagnant volume, but also that low that they were kind of holding on top of before the break below? Rising volume, exactly. We end up getting rising volume stepping up, candle over candle over candle over candle, and then it ended up slowing down as they had volume pick up on a hammer, and then they touched our target. So, and let's remove all this before I forget. This is how you need to be viewing price action with the levels that I'm setting each and every day on a watch list. If you don't know where my watch list is, reach out, ask where it is, tag me in the chat that you're in. I'm in multiple servers, so make sure you ask me, where are you posting this info, so you can see it for next time. But these levels, I'm not going to sit here and say are 100% accurate. They're not. Over the course of almost 4 or 5 years now, we have seen these levels hold an accuracy of at least 70 to 80% on a daily and weekly basis. So make sure you are at least adding these levels, because yes, you're going to lose plays, but you're still not going to miss out on good opportunity with these high probability levels. So make sure you take the time to go through them, not just mark them, but also review them, just like you saw me do here on Tesla with you guys. But let's go do a couple more. I'm not going to do as in-depth breakdowns as we did on Tesla right there, because I just really wanted to give you guys a good rubric to follow now. But now we can start to do the same for the rest. And as you can see here on Apple, let me go to the 5-day, 5-minute. We have the previous day high, the pre-market low, and I didn't really have to add everything else because it just wasn't as relevant. But we end up getting the same thing. You know, we failed to get over the levels that we have right above our heads here at 145.60s, 145.15, where they could have taken price over and started pushing with bulls, but they didn't. We ended up getting a 3-bar play from open, and they ended up getting us a bear flag, which we called out in stream, and we ended up hitting all of our targets on the watch list. So as you guys can see, a very, very effective system. But let's chart this up again together. Let's go out to the daily. And we do the same thing again. You can see I unclear it. Bam, all my levels are there. We're about to redo that again though. So let's kind of just start where I did back then. We'll just kind of cheat and start where we did. But again, grabbing the tops of candles. I'm grabbing the meat of the bone, not the hide, not the wick. I'm grabbing the meat. And I'm not Ricky G. I'm not Umar. I'm not any of these, you know, social media traders. I'm going to give you the facts of what I'm looking at. I'm not here to teach you about indicators. You know, these indicators are great. They're great side confirmation. But overall, you need to be focused on grabbing effective levels that make sense to you and a repeatable system. This is exactly what this is, a repeatable system. And though I normally don't like to grab over red candles, I'm still grabbing these emerging candles, so don't fret about that. Let's get some more emerging candles. Again, these are just really good breaks. I see I'm pretty well above price. I'm going to finish off this last hill, and then we'll finish off some of these bigger ranges. You can see, like right here, I have a very big range between that level and that level. So let's go ahead and fix that. Remove. And there were a couple big ranges back here as well that we could fix. Actually, that one's pretty decent. It's the rest of these that was kind of crazy. So between here and here, we need to add one. Again, just because we don't like the range between them. There's a pretty big range between these. Whoops. Pretty big range between these that we could fix. And it can get very tedious, but trust me, taking the time to actually add these and kind of talk out loud to yourself and remind yourself, all right, this is what I need to be grabbing. It really does help you visualize and remember for the future. It really is like building your muscle memory to kind of remember, all right, I need to be grabbing this level. So going into tomorrow, we can add our previous day low / close. You know, if you really want to grab both of those, you can. But these will be good levels to have for tomorrow. We have our previous day open, previous day high, which we don't need to mark. We have good level there. And that's about it. So we'll add our pre-market low and pre-market high going into tomorrow. But no matter what, no matter where we start, you know, we end up starting up here. You know, price rallies overnight. We end up starting here. You know, we have a good level to watch above, a good level to watch below. And at any time from market open, we can make our initiating range based on our short-term levels again. So make sure you're adding those short-term levels and going through your price history to give you really a good combination of everything. You can see I still have a bit of a wide range here between 136.80s and 139. So if you really wanted to fix this range or even this range up here, you could add another halfway point. But I'm just going to leave it as is so we can keep it clean. But these are already 4 tickers you guys have set going into the next week. So regardless of how the market reacts, you guys already have SPY, the Qs, Tesla, Apple already set in place. Let's do a couple more. We'll do AMD because I really do need to redo this chart. So we'll do AMD, another fan favorite. So I see we're in the 55s. I'm gonna start a little bit lower than that. Whoops. But it's a very easy system to follow. It really doesn't take much thinking. It just takes a lot of looking at, you know. So, and that's what I tell everybody who's in streams. You know, you really shouldn't be going over this stuff just like once a week or just here or there. You know, you really should be going over this as much as you possibly can because it will help you in the future. You can see we're getting really big ranges here on AMD. But it'll help you in the future for trading opportunities when you start to realize like, oh crap, you know, I don't really have a good system in place. I don't really understand what I'm doing, and it's okay. You know, you're allowed to not know what you're doing. It's totally fine. We all start out that way. But don't just keep doing the same thing over and over where you don't have a system in place or a routine or anything like that. Give yourself a chance. You know, it doesn't take a smart person to be good at trading. It takes a disciplined person to be good at trading. So make sure you understand that. Let's fix some of these ranges, though. I don't like that range either. Auto zoom, and then we have all these huge ranges that I definitely need to fix. So I'll go from here to here. Add that one. Remove. I don't like this range. It's also very big. Go ahead and add a halfway point in between there. Remove. And then I go ahead and finish off that last hill. And it looks like we got good levels above, good levels below. Definitely could edit some because you can see I still have very wide ranges. But overall, this is going to give me a good initial plan for going into tomorrow. So I can add that previous day open, previous day high, previous day low, previous day close. And then I'll add that pre-market high, pre-market low going into tomorrow. And I have a plan based on very strong levels using this combining factor of the price history plus our intraday / pre-market system to help us get not just good levels, but so we can start to spot really good entry opportunities. So, and again, like I said in the Tesla and Apple position or examples, it also gives you good stop losses, really good targets. You know, it's not just entries. It's not. It really does give you everything. You just have to look for it. But utilize these levels as a team, combine them to help you out on future trades. So now we have Tesla, Apple, AMD, SPY, the Qs. We have all of these set. Let's do one more. Crowd. No, I don't really like day trading crowd, I'll be honest. Square's not a bad one. It just doesn't move as rapid as you think. You know, there's days where it's still in range. Like right here, this is in range for 3 days straight. But each of those days, it bounced from the same level and gave really good trading opportunity. You know, so it wouldn't have been as easy to see, but you would have been needing to look for better buy the dip plays. And I really don't see a strong one here that gives you clear insight. Now, easily you could say, oh, well, there's a low here. They held above the low. which also, if you go from the low to where we slowed down, they ended up holding the really good control point and golden pocket. So yeah, that was one good indication, but nothing as concrete as I like to look for. When I'm looking for a buy the dip play, this is a better example here. I'm not just looking for a good level to be retaken. I want to see one really good low. Then I want to see a second really good low. Now, whether that low is the same level or a little bit higher, I don't care. I'm not playing anything here until I see one good low, a good push, a second good low, and on that second push that breaks this first push, I like to look for rising volume. So let's zoom in and see, did we get that on this one? As we pushed through on these two candles here, we got rising volume. And also you can kind of see it here as well, popping over here when it was bouncing off of that second low. But right here, rising volume, candle over candle as it holds on top of that level, giving you good indication to start getting into calls, longs, all that good stuff. Now, what are some really good targets based on levels we're aware of? Well, this day's pre-market was here, this day's open was here, and the current high before all of this, again, it's easy to be Captain Hindsight. Make sure you're kind of thinking in the mindset of, well, at that time, I would have had this marked. This is the high of day at that time. These would have been 1, 2, 3 really, really good high probability targets to start scaling out towards. And this is a great example right here to break down the staircase method. Keanu and a bunch of people from the stream really wanted me to do a video on this. I think I'm just going to go ahead and add it here because it's a really good addition to this already quality video. But overall, when doing the buy the dip strategy, this is a great staircase method example right here. So let's say we entered 5 contracts right here because we saw that initiating buy the dip reaction, right? So we're in. I'll just highlight those two candles together. So we're in right here, 5 contracts, let's say at 100 a pair, 100 a piece. So you're in for $500. Which a good rule of thumb, by the way, is to trade with less than 10% of your account in each trade. And you shouldn't be risking to lose half of each position every time you take a trade. Make sure you understand to keep your losses small because you are definitely going to win a lot, but it doesn't really help if you're taking really big losses and it's completely wiping out your wins. But let's get back to the staircase method. So the staircase method is essentially buying contracts and then selling at multiple targets. Again, everyone always thinks, you know, I want to be like that big trader I saw on YouTube. He made $50,000. He made 300%. Yes, but he's only done that with a staircase type system. Again, and this means buying contracts and shedding at multiple targets, not just buying everything here and selling everything here. You're not going to catch the whole move. Get that out of your head. Get the whole would've, could've, should've out of your head. It's not going to happen. Put it behind you. Focus on what you can control. Okay, so the staircase method, and this is a really good first step. Start with just one contract. Get really good at buying one contract at one good spot and selling at the first target. So you should have already been selling within the next 5 to 15 minutes. You should have already been selling within 10 to 15 minutes of entering this trade, right? So in one contract at 100, you're out at 1.20. That's 20%. Bam, you're out. Okay, focus on getting really good at that, getting really confident in being able to find these setups, whether it's from an initiating break, from a retest move, from the buy the dip strategy, it doesn't matter. Make sure you get really good at buying one contract and selling at the very first target. I'm not joking. Get good at this. This is the first step of our staircase, right? Now let's get into the second part. Let's say you get really good at taking those first initial profits, right? So you want to start growing a little bit more. What can you do? Let's say you grab 3 contracts, okay? So let's say you grab 3 contracts here. So we're in at 100, so $300. You sold 1 here, right? You need to be selling at least 1 or 2 of your 3 contracts here. Not all of them, but not none of them either. You need to be selling 1 to 2 of those 3 contracts on this second step to taking it into the first target. Therefore, you're out of most of your position with really good risk reward of taking it to the farther level, right? And then you can take profit into that level. So this is where you need to be getting it. The second target, working towards the second target, giving yourself really good risk reward going towards the next target, okay? So we end up taking our last contract here at, let's say it's at 1.80. It's 80% off of that one contract, and we got 20% off of the other 2. So you end up making $120. Really good gain. That's an over 100% gain since you really, or no, it's not over 100%, I'm sorry. It's just over 50% because you ended up taking 3 contracts at 300, and you end up selling all of them for an overall $180 gain. So this is first target, second target. Sorry, I had to breathe. Third step, right? When you're grabbing more contracts, and let's say you have 3 or 4 really good targets that you like. So let's look at how we can get to this target and how we can get to this target without making anything up, right? So let's say in the first scenario, you had 1 contract you sold here. In the second scenario, you had 3, you sold 2 here, you sold the last one here. Now, third step, third step of our little staircase system, staircase method. Being able to buy more contracts. Let's say you bought 5 or even 7. Let's say you bought 5, right? 5 contracts here, and you bought them at the same cost at 100, so you spent 500. You sold 1 or 2 here. You sold 1 or 2 here. Now you have a chance of making that last one sell to that third target, right? Let's say you had more than 5 contracts. So let's just keep it at 5 so it's a constant variable. Let's say you had 5 here. You sold 1 here, 2 here, 1 here. So you got 1, 2, 1. You got 4 contracts sold, and you have a really good chance of making it to that farther target. Now, should you be aiming for 56, knowing you entered at 53.30s? No, that's a very big move, and you can't expect to get big moves like this every single day. So what should we do? We should be passive. So that's why you always hear me say take most here, take the rest here, and vice versa, you know, going down. But this is the staircase method, though. This is how you should practice moving forward, regardless of what you're looking at. So make sure you understand the staircase method. If you guys have any other questions, make sure to ask in the comment section. I would love to go, and please ask in the comment section, so if other people have the same question and they're just too scared to ask, they can see that we've already had the conversation and they can pick up on what you were putting down. So make sure you understand that, ask questions, engage, interact, but this is essentially the staircase method, and this is essentially how you trade the levels and how you should look at them moving forward. So make sure to always plan ahead. You shouldn't be jumping into your position here and going, all right, I think I'm going to do this now that I'm in. No, this should already have been thought of while you were entering, before you were entering. It shouldn't be thought of after you've entered the play and you haven't planned anything else out. You should already have target set, a stop loss set. You know, what would have been a good stop loss in this trade? Whoops, let me zoom back in. Jesus. What would have been a really good stop loss in this play, right? Seeing that we entered here within one of these 2 candles, a really good stop loss, a tight stop loss would have been 1, the level that you entered on, because this is where we were looking for them to set on top of for an increased movement, or that other retracement move. So if you're really trying to keep it loose, this would have been your main stop loss. But this was a very good tight stop loss that would have kept you in for a very small loss in case it did reverse back down. Again, using just volume and high probability levels to help us navigate. Again, you can't just do one without the other. You have to use the volume with the levels so you can navigate this thoroughly and while it making sense. Again, it kind of sucks whenever you see a rising volume push above a level and then you enter and then it sells back off. You know, well, that's because that's the 40% entry. It's not always going to keep going. That's why I label it the 40% entry. It's not as confident. It's not always going to continue, whereas a retest move has a way better probability of continuing higher. So if you're someone who always catches yourself entering early, start to look for those retest moves more. Start to look for those short-term holds before getting that increased movement. You shouldn't be looking, you should be limiting yourself to these entries. Okay, if you're not good at 40% entries, focus on retest, focus on buy the dip strategies. Again, both of these take time, so you are going to have to apply a lot of patience, but it's what you should be aiming for, limiting yourself. Everyone always says, I'm not in control of my growth, I'm not in control of my account, I keep blowing it. Well, guess what? You are in control. Limit yourself. You're the one who's clicking buy and sell, not the market. So again, take time to review, take time to visualize. This is genuinely how you get better at viewing this stuff. But please leave a like on this video. Please drop a comment on this video. We went through Square, AMD, Apple, Tesla, Square, the Qs, with in-depth breakdowns and reviews on how we like to look at this stuff, how we like to trade with it, and the different strategies we use. Again, the initiating breakout, the 40% entry, the retest or the 80% entry, and the buy the dip strategy again. So these are 3 types of entries you should be limiting yourself to, and we have other content on. So if this video is not, which this was pretty good breakdown, if this still does not suffice what you're looking for, check out the playlist, ask questions, drop comments, let me know, reach out, interact, and engage. This is the only way to grow while you're trying to learn. But again, one last note before I end this. You should not be trading every single day. You should not be trading every single move. You should be reviewing and visualizing as much as you possibly can. With the staircase method, you know, you can paper trade, mental trade as much as you possibly want, and then you can jump into positions, okay? So give yourself time, give yourself that real chance, that real base build of your own, so you're not ever having to revert back and go backwards. Again, a lot of people always hit me up feeling like they're going backwards. That's totally fine. We always need to kind of give ourselves a reset, just a kind of a restart move, and that's what sometimes you have to do when you have these moments. So make sure you're not just, you know, freaking out and being emotional and then continuing to trade. Make sure you stop yourself, and you go back and review as much as you possibly can, ask questions, see what you can do, and post trade reviews. You shouldn't be just taking trades. You should be posting a trade review every time you even look to take a trade or mental trade. Post trade reviews as much as you possibly can. But hopefully this video is what you guys were looking for. Please leave a like, please leave a comment. And these are normally public. I mean, these are normally private, but I wanted to do a public one just to kind of give everybody a good rubric of what we like to look for. But I'll see you guys later on and hope you enjoy.